Welcome to the Crypto Report. I'm your host, Dylan Shively, and this is our market update. In the world of cryptocurrency, we've seen Bitcoin breaking below the ascending channel that has recently formed, giving a retest to that level as new resistance. Bitcoin has seen a 28% gain in just 18 days, and experts believe we need to cool off before potentially reaching higher levels. Key support for Bitcoin is currently $20,000, although there may be a dip below that area before the uptrend resumes. KillerWhale predicts that Bitcoin will reach higher towards 25 and potentially even 29,000, but not without seeing a pullback into the 20,000 region first. Ethereum is also pulling back after closing below the ascending channel that formed over the course of the last week. We have seen a retest of the $1,600 area, which is new resistance. For now, 1,500 is holding as support, but a daily close below that would open the region of 1,400 and potentially even 1,300. Analysts are still short-term bullish on ETH to USD, but they believe that a pullback is necessary and a little bit of consolidation. In stock market news, the SPY pulled back from the all-time high trend line, forming a descending broadening structure. The SPY is fast approaching a potential breakout zone, which has been a major pivot area for the market to potentially reverse. A break upward from there is likely. A close below that would open downside, potentially to the descending formation support. Analysts predict that we will eventually see the SPY breaking above the all-time high trend line. Bitcoin's 30-day correlation with the Nasdaq. According to the latest weekly report from Arcane research, the correlation between Bitcoin and the Nasdaq has dropped significantly, with the 30-day correlation indicator measuring a value of just 0.29. This indicator measures how closely Bitcoin and other assets have performed during the past month, and a value of 0.29 suggests that movements in the US markets are becoming less relevant to Bitcoin. The report notes that throughout most of 2022, Bitcoin 30-day correlation with the Nasdaq was at an all-time high positive value, suggesting that Bitcoin was moving closely with the US equity markets. This was due to a number of factors, including an increasing presence of institutional investors treating Bitcoin as a risk asset, growth companies like Tesla holding large amounts of Bitcoin exposure, and miners selling off their Bitcoin reserves due to high interest rates and rising energy costs. Additionally, crypto companies have prioritized growth over healthy financials in the low interest rate regime of the past. This has led to short-sighted decisions and a prolonged bear market that has left many firms with huge losses, some of which have even gone bankrupt. However, most recently, correlation has decreased significantly, reaching its lowest level observed since December of 2021. The chart shows this trend is the lowest correlation level in over a year. The report suggests that a decrease in correlation could be due to a shift in the market, but with more investors treating Bitcoin as a digital asset rather than traditional risk asset, At the time of writing, Bitcoin is trading around 21,200 and is up 28% in the last week. This news suggests that Bitcoin is becoming less tied to traditional stock markets, and investors should keep an eye on the trend as it develops. It is important to note that correlation does not equal causation, and it's not clear from this report whether a decrease in correlation is due to a shift in the market or simply a coincidence. Nevertheless, it's worth paying attention to, as this trend might indicate a change in the market sentiment or a shift in investment strategy. As displayed in the graph, the Bitcoin 30-day correlation with the Nasdaq was at a high positive value throughout most of 2022, suggesting that Bitcoin was moving closely with the US equity markets then. The report notes a few reasons behind the two assets being this correlated. First, institutional investors who treat Bitcoin as a risk-on asset saw a rising presence in the market during this period. These investors are sensitive to macro movements and thus contribute to Bitcoin's high correlation with the stock market. Second, growth companies like Tesla held large amounts of Bitcoin exposure in the past year. This presence of public companies also naturally led to Bitcoin being tied with the Nasdaq. The third factor was the selling being done by miners. This cohort was being pressured by higher interest rates. They took on large debts to expand their operations, coupled with rising energy costs, left them with no choice but to sell their Bitcoin reserves. The fourth and last reason was the short-sighted decisions made by some crypto companies who prioritized growth over healthy financials. Be sure to like and subscribe. This concludes our financial update. Thank you for tuning in to the Killer Whale Crypto Report. Change the way you trade.